questions.
What's up and welcome, ladies and gentlemen. It's Jadu and Jesse here in studio. We're a couple minutes behind. It is noon plus 17 on the East Coast, and we're here for the Cash Coaching Banking Hour, the Infinite Banking Hour. Jesse, welcome back to the studio, my friend.
Thanks, buddy.
Okay, today, ladies and gentlemen, we're going to run it back like we normally do. Each and every week, we ask you for your questions, comments, and concerns about the save and spend system, infinite banking, life insurance, and building a legacy for your family that is long lasting well after you're gone. That's what we want to talk about here. So if you're joining us for the very first time, you're in the right place for an hour. And wherever you are, we'd love to know. Throw it in the chat. We're on the northwest corner of the southeastern state, Greenville, South Carolina, coming to you from the upstate. And our HQ headquarters here has a studio where we come together each and every week to walk and talk through what we implemented and learned and how we are on the path for financial freedom for our families. And we want to help you do the exact same thing.
Absolutely. Anything personal finance, really. Let's go.
You know what? There's a lot of questions out there that most people have because you're already on the journey somewhere. You're already working. You're already doing something dumb, trying to get out of it. You're already involved with something you think is really good. Yeah. And we want to know about those things too. Sometimes we overtalk you because you're starting from a place that we'd love to know about. Are you trying to get out of a timeshare? I may not know every detail, but we do know some things that might help you, and we can point you toward resources. So if you've never been with us before, you might be seeing us on YouTube right now. Welcome. It's the Banking Bros channel there. Normally, I might be co-hosted in studio with my brother, and we call ourselves the Banking Bros. Here at the Cash Compound, there's several great coaches like Jesse Whole Life Durham, Jesse W. Durham of Durham Talents, walking and talking through his perspective and how he utilizes what we do in his own life and how he helps have that conversation with people. Yep. And you may see it a little differently than me. Is that okay?
It's very okay. It's good. Iron sharpens iron.
Iron sharpens iron. I think that gets overused a lot because I've never really been inside an iron sharpening area. What does that mean? Iron sharpens iron. Well, like I think 100 years ago, people would have known.
If I want to put an edge on my spear that I've been wearing out at the homestead,
okay,
I'm going to go get my whetstone. I'm going to grind on that point to get it back up to
and
where
they're both iron.
Needs to be.
It's iron?
Well, no, they're both hard. They're both hard.
Oh, I would have thought they both were iron. So here's the thing. How will you urbanize that for folks who are not at the homestead with the homestead at the whetstone, but they're living in the deluxe apartment in the sky? They moving on up. How would you explain it to them?
Birds of a feather flock together, right? Scripture says that, if you hang around fools, you're probably going to be a fool.
All right.
So if you hang around quality people, you're having quality conversations, you're actually tuning into a personal finance conversation, you're much more likely to get great information, great insights, and iron sharpen iron.
I've recently had that realization. I've said it to you a couple of times that I've been in spaces and places, and I've got faces in my life right now that are pouring into me about investments.
Thanks to God's grace.
Yeah. And I'm like, you know what? I love it. There are people, I didn't have those conversations or those peers or those mentors when I was 21, 31 years old. And maybe that's why you're here. Like my man, Jake out there. Jake coming in from, can we put that on the screen, Will? I think we can. So Will's operating some of the controls today from the studio, and he's coming in from Pauline and Enery today. For those of you who are reading that and don't know what those words are, those are areas in our neck of the woods, as Al Roker would say in the world. So Pauline and Enery, let's go. So Jake also says it is always a good idea to get a new policy illustration yearly. And is it, this is a question. Is it always a good idea to get a new policy illustration, Jesse? And how does that help in your knowledge of using this acronym that maybe not everybody knows, IBC?
Yep. So IBC meaning the infinite banking concept, commonly referred to infinite banking. We call it the save and spend system around here. So my answer is yes. I had a great consultation call yesterday with a client who is celebrating a year anniversary,
Mhm.
owning a policy that they're using for financing in their life. And yes, that policy is 1 year older than it was last year. So it's more efficient. It
Tell
has
us
grown.
what the crap does that mean for those of us who grew up not understanding anything about insurance or life insurance, came out of school, college, got myself a 4-year bachelor's degree. Somebody called me up to talk about finances and sat me down, said he was a financial advisor, and then he introduces me to life insurance to protect my family. What the crap do you mean it gets more efficient?
Yeah. So people are really familiar with life insurance. Well, what I would say is that when you're working with someone who knows how to design a life insurance policy to have a high cash value using a whole life insurance policy, just that simply means you'll own it for your whole life. You can use it for your whole life. It'll have a guaranteed death benefit for your whole life. It'll have a guaranteed cash value that you can leverage for your whole
Equity is what
life.
I like to say a lot.
Yep,
Equity.
exactly.
A lot of us know what that means, maybe. Yeah.
Yep, exactly. Then you want to be able to keep a pulse on that policy as you use it, as you own it, as it develops, as it matures, as it compounds, as it grows. So we have consultation calls with our clients around here. Of course, they are familiar with these policies, but they become more familiar. We have more conversations. So just to speak plainly, the gentleman that I spoke with used a whole life insurance policy
Yep.
to take a family vacation to Europe.
What?
Beautiful trip, beautiful time, beautiful memories. And of course, we get to talk about the multiple jobs that his dollars accomplished because he decided to put it into one of these specially designed whole life policies first, where he's got this protection.
Does
got
it
this
get
cash
any better than
value.
that?
Right. Take the family on the beautiful trip. And then, of course, we talked about how to keep using that policy. Well, okay, great trip. Glad you had a good time. Pictures, all these things. Now let's strategically put more capital there because we're probably going to take another
bigger,
trip,
better
a bigger
trip.
trip, a longer trip, more trips. So let's
go.
put that back.
We're going to
here.
go from hostels to hotels on the next trip.
Right.
Where's your favorite place in Europe? You been?
I have been.
Where do you like?
I've spent the most time in Spain, so I'd probably say Spain.
Well, you're fluent in Spanish.
Yes.
Yeah. So was this a like an educational
Study abroad? Yep.
Yeah. Okay. Yeah.
Yep.
I love that. Okay. So I've been to Spain as well, but the question is, ladies and gentlemen, where are you going, and where's your policy going to take you? If you have a whole life insurance policy built the way Jesse is talking about, you could leverage the policy. You ever heard that rich people buy assets? They borrow against those assets so they don't have to pay taxes, because borrowing or taking loans is not income for the IRS to tax you on. And if you own stuff you can borrow on with full control and cash to get to, you can go wherever you want to go. Where in Europe would you go? If Europe is your spot, let us know. We've got a comment out there from somebody I was trying to figure out who had the bug eyes.
Right. Figure out who's
on the left, because I'm normally
who's left,
because in the studio I'm like on his right, he's on my left, but you're on the screen. I think I'm on the left is what we're seeing here on one of our monitors, and everybody hates Chris out there, just making fun of me. Look at that, little Steve Urkel looking Spike Lee joint up in here. But Kathleen, we're glad you're here. Either way, so I love Spain. Okay. I've been to Madrid.
Keep going. Madrid.
But this was before I had a policy, so I spent my own money and it's gone.
Yeah.
Okay. I've also done. I was born in Europe. Actually, I was born in Germany. Been there. Been to about 7 or 8 countries there, and also the Europe part that's not connected. I've been to England as well.
Nice.
So I love them all.
So my trip to Spain would have contributed to a lot of those student loans that I did use a whole life policy to help pay off.
All right, ladies and gentlemen, hold on. I've got some, we're going to, if we can switch to, we've got an overhead camera here today. And what I'm going to do is I'm going to put some graphics up there for you to see. Let's see if I can find a student loan. Okay, we need money for school, do we not?
That's right.
There it is. Can we switch to that? Yes, it's on the screen. You guys can see it. All right. And we, hold on. We went on vacay a few minutes ago. Can you guys see that? Okay, we went on vacay. All right, does Spain have any nice beaches that we should know
Yes,
about?
for
Does it?
sure.
Okay, good. All right. I'm looking for something for, there we go. One room schoolhouse. We've decided that's not a residence. This is a one room schoolhouse.
Okay.
Tell us about these student loans and how this idea of the save and spend system involves you, student loans, paying them off, not paying them off, having them, not having them.
Sure. So I did the 4-year route, and I did love travel, and I did love learning Spanish. So I wanted to go to some Spanish speaking countries, and I did that on student loans mostly. I mean, I worked all through college.
What did you do?
I did a myriad of things. I did landscaping over the summers. I tutored for the university
Okay.
all 4 years, worked all kinds of jobs. But those were two of the biggest or the most long-standing. So I worked, but I still did have student loans.
Okay, so you graduate and you commence into the real world, big boy job territory, but you owe money for things that you had already done. You owe future money, future work effort, future income to someone else.
Yeah.
Okay, so about how much? Give us the total. What was it?
Oh, I can't remember. Thousands.
Thousands. Okay.
Thousands. It was a lot to me for sure.
Okay, so I had the small, I also got a degree, had some loans, and it was the smallest 5-figure number there is.
Okay.
So how much is that?
About 10,000.
That's right. I had 10 grand. So use my numbers. $10,000. I had a loan interest on that of 12.6.
Yikes.
12.6. I was not worried about it completely. I was not worried about it in the way you're probably thinking. I was very worried about having a bill because I had no job when I got out of school. But what we've learned is how, in utilizing the system that we teach and preach and that we will help you understand on a free one-on-one consultation, is, hey, I don't have a lot of money, but I do have bills. I do owe money to third parties from stuff I already did, right? Like school. Raise your hand if you've got school loans out. Let us know in the chat. You owe Fannie Mae, Sallie Mae, your school, your mom, you owe the bank. I don't know. You went to grad school, so you owe it to whoever, right? What we learned is paying your dollars toward those bills meant your dollars went away. And I was like, well, there's nothing to learn there. Of course, I already knew that.
And then here's where you put in that forever.
Forever. We got any 90s babies out there? Forever. Okay, but here's what we learned. If you're utilizing the right tool, you could borrow against the tool while it appreciated in value and got more efficient, the word you were saying earlier. It would actually be worth more every day. You could take money against that value, something you own and control completely, and you could pay off your loans because you without using your money.
Yes.
That was crazy. Yes. To me. It took me, but it took me so long to kind of understand that, Jesse. But I needed to understand that you finance everything you buy. Hold up the book, let them know. You finance everything you buy, ladies and gentlemen. You either spend your money down to zero, you don't have it anymore, can't work for you, it's gone, or you borrow someone else's money and you pay interest. There's only two ways. But in the second scenario, borrowing against something you own, you control, that appreciates in value, is definitely what you want to do if you understand it. You'll do it every time. You will not spend your money down to zero. You will borrow against assets that you own, like the rich and wealthy. You will not go down in assets. You just leverage asset value, but you'll still have your money.
Right. That's crazy. Einstein was the one who is essentially attributed, right, with saying that, well, you can either earn compound interest if and when you understand it, but if not, you'll be the one that pays compound interest. So you can enjoy all those benefits that you're describing, or you're going to be the one that's paying for those benefits to somebody else.
That's right. Okay. Can we go to our second screen, ladies and gentlemen? If your family never talked about this, if your family, oh, they've got it right for me. If your family never had conversations like this, let us know in the chat. You'd love for your family from now on, for the future, you could fund your faith, your fitness, both physically and mentally. You could do your family trips, vacations, and fun with your friends, all these F words. If you want to learn the F words in your family, financing experience, you probably need to understand the tools and the products.
Mm-hmm.
Because all I understood at that time when I got out of school and I had debt was a traditional banking institution. Right here, Jesse.
Yeah.
Traditional banking institution, and they controlled my money. I didn't know what that meant. I didn't care, didn't even think about it. All I knew was they made it convenient for me to have a debit card.
It's just what you do.
Okay, so why don't we talk about some of these products here? First off, let's talk about some of the traditional products most people think they do understand.
Okay.
So first off, you get out of school, you have student loan debt.
Mm-hmm.
What tools are you about to use? What have you been using? What are you about to sign up for? 21, 22 years old.
Exactly. Yep. So while still paying the student loans, I signed up for all the conventional things. I had the pension that came with that first job.
Oh, a pension. Okay. How long did you have to get in there to be vested?
Well, it was I don't even know. It was just an automatic thing. They're taking up, several percentage points of your gross income. Right.
Okay.
You never see that money.
Okay. So it was going to go into a pension and there was going to be guaranteed annuitized payments one day.
Right.
After retirement or whatever.
Right.
Or were those going to be taxed?
Yes.
Okay.
And then I opted into the 401k.
401k. Okay. Tell us about that product.
Yep. So that one was voluntary at the time. Now you're automatically opted into it and you have to opt out. But at the time you had to opt in. So I did. And that's wild for me to think about now that while I was paying the student loan people future dollars that I hadn't earned, I also had bought into that conventional wisdom of, and simultaneously, while I'm giving that away forever, I'm locking up more of my money.
Yeah, but that's not how you thought about it.
Nope. Yeah.
How did you think about it, and how do the people out there think about it?
Yeah,
that 401k is not locking away money. It's being efficient and good steward for your later life, is it not? That's how they think about it.
Yes. The idea overall of planning ahead for the future at that time in that way made sense, and I wanted to do it. Obviously, young married man, we would have started having children a little while thereafter. Yes, I wanted to plan for the future, so I did opt into that, and I did do that.
So here's my question now. When you think about the math behind it, are you going to win in the long run paying 12.6% on your student loans while earning a potential average in the market in a 401k at 9?
I was persuaded that no, that did not behoove me to continue in that manner.
Okay, but do you think most of our listeners think that they are winning? They are paying credit cards, they are paying school loans. They probably have a much less payment on the school loans that I had in terms of percentage points. Probably 3, 4, 5%, maybe even the government. Well, isn't the government? Hold on, ladies and gentlemen, let us know. If you have student loans, haven't they been deferred from the government between elections and COVID until this fall? Don't they all start to kick back in?
I've definitely been having conversations with clients and prospective clients about, we've been holding off.
Yeah. Don't they kick back in? Like, is it this month? Is it September 25th?
I can't remember exactly when off the top of my head right now, but I've been having those conversations with folks.
Yes. Okay. So that it must be, it must mean something if he's having these conversations. Remember, you can have a one-on-one cash consultation with any of our coaches around here. Jesse, Jadu, Jonah, we are all ready for you. There's even another guy named Sean. So if you hear from us because you've opted in and you get a text or an email confirmation, just know that we've got a free getting to know you back and forth. Ask some questions. You ping us with, I heard this one thing, or I've heard something before, or I've bought a product. I'd like to show you the paperwork. That's all a part of our consultation to help you with guaranteed lifetime income options and infinite banking. If you know what that means, if you know, you know. We are going to have that conversation with you and show you what we did to make sure our family was financially free. Did in the past. We already did. We sign up, we do it. And guess what? You can ask us questions about our personal situation. Okay, so bring it to us now, ladies and gentlemen. If you are not on Facebook right now, no, I already shouted to YouTube, but you might be on Facebook. We have got a community there on our page. We're the Cash Compound. In our community, we are Infinite Bankers. Infinite Bankers. And we have got resources for you there. Jesse posts a lot of video. Jesse, what have you been doing video about recently? And what might we see on the Facebook page or the group?
Yeah, one particular series that I've been covering recently is talking about the vernacular or the terminology around whole life insurance. It's a very misunderstood financial asset. So I've got a series where I'm dedicatedly talking about, well, what does it mean to use this policy because of these characteristics of it being specifically designed for utilization.
Okay. And so inside Infinite Bankers, that's the name of
Mhm.
our Facebook community. We'd love to have you in there. Answer a question or two, drop your email in, and we'll send you 1 or 2 free gifts right away so we can have that conversation with you. And so you can just hang around a little bit and read people's comments and start to figure out what's going on here. Because before you know, you might need a complete paradigm shift because there's a lot of things that you think are true that just might not be that way at all. So we're going to challenge your thinking in there with some of the things that we say and things that we post and personal paperwork
Yeah.
that I post. Personal stuff that comes in like I own this. This is how it's growing. This is how I use it. Stuff like that. So
Sharing best practices and insights. Absolutely.
but you might also be on IG. Ladies and gentlemen, welcome to you on the Banking Bros Instagram channel right now. We've got a few folks who have jumped in. Ronald, Rattan, we got 12 Gauge, T-Wiz, Genuinely Jory, all sorts of folks have joined us over there. We've got a community about 7,000 or so on our Instagram. And if you get into our DMs on Instagram, it's very easy for me most of the time out of all of our coaches to hit you back with a link, hit you back with a voice memo. So if you want to ask a one-off question in there, you're probably going to get me responding to it just in case Instagram is your channel. Okay, Jesse, we're back to talking about the financial products coming out of school.
Okay.
You had a pension in your first job.
Yep.
That they automatically put you in.
Mm-hmm.
You got a 401k that you voluntarily jumped into.
Mm-hmm.
What else? What else do we need to know?
I mean, probably just a lot of the company offered things at the time. So stuff that would have been small. It would have been something.
Okay.
Companies paying for it.
Yep.
But nothing else that I'd really opted into.
What about a life insurance policy? Did your company offer you and your family something at least while you worked there?
Right. Exactly. Yes. Something small, something that would have been for burial. My first career was in law enforcement. So there was something there. Very small.
They were planning for you to be buried.
Maybe.
Who knows? But I mean, obviously, God bless all the folks who are trying to keep us safe out there in this wild world of sports. This was in North Carolina, correct?
Yep.
And what type of job did you have in law enforcement?
Patrol. I was on the road.
The real stuff.
Yeah.
Oh, Lord of mercy. What were people doing out there that I need to know about?
Yes.
All of it.
And we're expecting them to stop at stop signs.
Right. But they were doing stuff. They weren't stopping at stop signs. They were doing everything else, but not stopping. Okay. And how long did you have that career? And as you transitioned away from it, what stuck with you?
Yeah.
And what went by the wayside? And were you taxed? Could you keep it? Did you have to pay for it? Did you leave it behind?
Yeah. So much was left behind.
Okay.
I took nothing with me when I stepped into education in North Carolina's government school system, and opted into the same things essentially there. You know, the 401k, there's a state pension there as well, so there's more income automatically coming out. But at that point in time, I did, because we started a family as a young father, I did decide I do want some privately owned life insurance. So I went to the insurance office there in town, talked to the box store agent, and got something that we would privately own.
Now, what prompted you to do that? And the reason I ask is not because I think it's crazy or I think you did something wrong. Of course, lots of people out there have insurance. They might have something at work and personal. They may have 2 policies on themselves or on the missus or the kids. But I didn't know about that. How did you know? Do you remember the coming of age?
In general, I would say the only 2 things that stick out to me, because it wasn't like somebody close to me died at that time. I know that's the case for some people. They just experience a loss in the family. They're like, oh, well, I'm never going to have, my family deal with, the financial repercussions of not having protection. No, it was just generally being in another career, realizing that certain things stay with the employer. Those benefits aren't, privately owned. I don't actually have those. and then being a dad. I mean, I think being a dad
That'll change you.
definitely changes your perspective. So
Yeah, when I became a father, there's a lot of news stories, honestly, the stuff you're probably fighting against out there in the wild world of sports, being a law enforcement officer, that when I saw those news stories and the bad things that get reported on nightly news to families, to children, I mean, changed me, because I was like, I didn't think about children all that often. But when you see things breaking apart families or violence against children, or even in the movies and stuff like that, I'm like, man, this is affecting me, because I got people watching a movie at night after the kids go to sleep, but I got people that I love that are so cute to watch sleep if they can stay asleep. And then you go watch television, Dateline and murder mystery. You're like, I can't be doing this anymore. This is wild. You know what I'm saying?
Yes.
Like, it changes you being a dad there. So God bless you families out there, families and fathers and all that type of stuff. We'd love to hear from you. Do you own life insurance outside of your JOB W-2? Did you know you can own as many policies as you might want, because your policies probably are not covering your entire value? You're probably worth,
for sure,
$2, $3, $4 million. Most people are, who are probably under 40 years old. $2, $3, $4 million based on your income, based on your assets. And most people carry life insurance for themselves or for their family once they're gone at probably under $1 million. Most people carry under $1 million.
For sure.
But
for sure. Even when I intentionally went out and got that life insurance on purpose to privately own it, I was nowhere near close to being fully insured. Nowhere close, less than half.
Yeah. So I never thought of it like that. I always thought about how much money does my family really need when I'm gone. That seemed to be the way the conversation was going at the time. And number two, how much do I really want to pay for it? I have extra money because I need to pay these bills and feed these kids and go places. How much does it cost to get these dollars? And I mean, does my family really need all that much? Jesse, you and I are similar age. So when we came out of school, on my first job, JOB, I moonlit and did some other things. I think you may have as well. Because as a police officer, you can do security and stuff like that, right? Okay.
Yes, sir.
So what I did was not in that world. I was in the sports world. I was in full-time sports and family entertainment with a baseball team. But my job salary coming out of the gate was, I've got it on paper. I've actually got the first offer in my file cabinet. Oh, it was $23,500. $23,500. I was single. I wasn't married right out of school at all. Like an extra 5 years before I had a family. But $23,500, and this is 2007.
Okay, very similar to where I was. Same year and everything.
Okay, yeah. So 2007, I got a job in the summer working for a sports team, and they gave me $23,500, and there was no benefit of a long-term plan. It was a brand new team. It was a brand new team that had just been formed. It's not like the ownership group had just been formed. Like, it wasn't like they used to own a team and then they came to own them. It was brand new, and there was no life insurance. There was no accidental death and dismemberment. You guys understand those terms? How many of you have one of those? Let us know. Maybe if you get hurt on the job, accidental death, or you lose a limb, crazy, you lose fingers, lose an arm, there's those types of policies, and your employers probably or possibly have them on you, just in case you're wondering. And it's called AD&D. If you see that popping up anywhere in your paperwork, accidental death and dismemberment, AD&D. There was none of that. $23,500 was my salary before taxes and whatever else they took out of those paychecks. And a good thing I was single, because I don't know how. Did your wife work?
Yes.
Yeah.
Yeah, she started work right out of college as well.
Good thing.
4-year degree.
Yeah, because I was hustling on the side and I made some extra money. But those things that you mentioned that your employer had on you or provided for you, not all of them rolled over. We use that term from time to time. What does that mean, Jesse? I went from law enforcement to teaching high school, right? Teaching high school. What does rollover mean? Or what stayed? Or could you keep the pension? Or was there money in there in the 401k that you could hold on to?
Right. So the state pension is essentially the same between law enforcement and the education, because it's the state.
Yeah, it's the state, but they probably put it in like a different bucket, but it had the same wrapper.
I don't even know.
Yeah. But I would assume there's probably like, oh, we have a different fund we invest in.
Right.
But it's still wrapped as though you don't get taxed now. We'll pay you a pension if you vest when you're 50, 60, whatever.
Right.
And
Achieve
we'll tax
that
you then.
10-year.
Yeah. So did
30
you,
years it's a 30-year track record for
so
both.
did you lose everything that was contributed when you left?
I presume so. I don't even know.
So I
presume
guess so. Man, that's crazy. So
Isn't
you
it?
put it in there,
Isn't it?
or they put it in there for you, or you put it in there, whatever. And if you
They put
don't
it in there.
vest, you don't get it.
Right.
At all. But you didn't, you could, it wouldn't have been nice to just have it at the time.
It would have been so much nicer knowing what I know now. For
Right.
sure.
Okay. So, ladies and gentlemen, how many of you have had coming to age moments where you had, maybe as Oprah would say, the aha, like, wow, what's going on with these financial tools that I'm already signed up for? Whether it is a student loan program. I went to school and I did not understand how much it was going to cost until I'm about to graduate and take my final exams. I said, I'm not sure I would have gone had I known it was costing this much. Yikes. Right? I was having a good time in school. And I really did enjoy my time in school, but like, yikes, this was too expensive. I didn't need it that much. I could have hung out with these people in the evening and on the weekend without going to class and getting this
Right.
bill. Like, I mean, I could have still called them. You know what I'm saying? How many of you have had those coming of age moments? But after that, we get into the things that are not employer provided or product structured, and it's the stuff we start to consume. All right, let's have a conversation about that. Why don't we have a little bit of a chit chat? Can we get a transition? There we go. We got a transition. Jesse, we're talking about what we might consume now. Coming out of school, we now finally start buying stuff. Maybe until that point, you had one of those cars that I used to, in the South, ladies and gentlemen, the humidity, it's not the heat that gets you.
The humidity.
It's the humidity. So I had cars out there back in the day that you'd have one shirt for driving and then you have another shirt for a rifle.
Right.
Because I had you put your arms up so the air could blow.
Draft.
Yeah, catch a little draft through here. Maybe it would blow, but it's blowing the hot air from your engine from outside. So now I got to consume stuff. I start buying stuff, and maybe we get the coveted. Put it on the screen there for us. We start getting credit cards out there. Jesse, tell us about what you and your family started buying post 2007 out of school, understanding some of those products that you first got from your employer. Now, what about the products hanging out in the garage and in the back deck? What did you buy?
Yeah, we probably paid cash for the very first vehicle that we got. You're making me think and remember.
Did you buy it off somebody you knew? Private sale.
Yep.
We all do that.
Yep. Paid cash for something, buying it from a family.
Yep.
And but the first real family vehicle, I guess, that one we did a conventional bank loan on.
Okay. Family vehicle, conventional bank loan. Do you remember what was the vehicle?
It was an X5, BMW X5.
BMW X5. Okay, very good. Rolling in the deep. Can't hide money. I didn't know how much teachers were making in North Carolina. What county is this?
That would have been after teaching. That would have been when we started business.
You started business.
Yes.
Okay, got you. So remember anything about those payments or the term length or the percentage?
Yeah. Well, I
APR.
won't remember the percentage, but
Okay.
it was, 5% or something.
Okay. So that's normal.
Yeah, normal. It was very normal. A few $100s a month, maybe close to $300-400 a month, 5%, 5 years.
Yeah. Okay. Very good.
Something like that.
All right. What other things might you have bought during this time? Were there any credit card bills piling up?
At that point in time, there was credit. There was credit cards being used.
Just consumables at the house, or did you guys like buy a little jet ski put on the back deck?
No real other toys in that way. As far as vehicles go, travel would have been a high priority for us. We would have used credit for some of that.
Okay.
But also, the same year that I'm describing, that all these things happened, launching a business, getting that family car in particular, using credit cards, was the same year that we learned about infinite banking.
Hold on. This is a lot then. going on.
It
A
was
lot.
yeah.
On a scale of 1 to stressful, where do you think you were at that time?
I'm the eternal optimist,
Okay.
always very hopeful. And that probably helps me to have borne a lot, but
Well, how did the missus feel about all of this?
more stress than me.
For sure.
That's just demeanor and personality and everything.
Okay.
For sure.
Mm-hmm.
So yeah, at that time of discovering infinite banking, we would have had the family car, we would have had credit cards, and we would have still had student loans.
Still had them.
Yep. So those big three things.
Well, we didn't really talk about the volume of the loans. So did she have them? You say loans plural. Did she have loans? Did she have a 4-year degree?
So when I say loans, I mean more than me. She had the 4-year degree. She had a lot more grants than me, better grades. So she had some when she got out of school, but paid hers off before we started having children. They were smaller.
Okay. And you both have bachelor's degrees. Does anybody have a master's?
Correct. No, just bachelor's.
Okay. Gotcha. Interesting. Let's go to the comment section here. Jake said something a few minutes ago. Jake, we appreciate you, man. He says, my student loans were actually forgiven. Lord of mercy. Jesus paid it all. Why these people still sending bills? I never wanted a 401k, but was opted in automatically, then found out I didn't have to contribute, but couldn't get out of it. Yikes. Sounds like involuntary servitude. Isn't that prohibited by the Constitution? Lincoln freed the slaves, Jake, back in 1963. We got to get out of that stuff we don't want to do. Jesse, any thoughts?
I have all kinds of thoughts in general about, yes, the government qualified plans. Yes, I do.
Mm-hmm. All right, Jake, appreciate that comment. Who else out there had involuntary or voluntary programs that you got signed up for?
And even about the pensions. I'm sorry. Let me, because you
ready.
did ask me. I will jump in on
ready.
it. I mean, just because there's not a state in the union that seems to be doing terribly well financially, it's a wild thing for me to think about the state of North Carolina getting 6% of my gross income while they're in debt themselves. Yeah, I mean,
right.
what sense does that make? So that's my one pervading thought right there when it comes
to all
those
states in debt.
Virtually all of them. I think there actually are one or two. I mean, you can go to usdebtclock.org.
But that's federal number.
But then there's a breakdown on that page where it'll show you each individual state. And I think there's a South Dakota or whatever out there that's actually in a surplus. Good for them. But virtually,
but because there's nobody there.
Majority.
It's just there's nobody there.
It's Buffalo
Buffalo and a mountain with president's faces on it. Right. It's over there.
But virtually all the 50 states are in debt, and yet, yes, we're told to opt into these government qualified.
But they gave me a credit score.
Right.
All right. They gave me a credit score.
Right.
Okay. So what other things and toys did you buy? I want to know, what's the worst toy decision you've ever made? Jesse says he wasn't consuming things in terms of jet skis or gas grills on the back porch that you financed.
No motorcycles.
No motorcycles. None of that. You didn't have any of that. Okay. You didn't finance a couch.
Nope.
Over at Rooms to Go.
Nope, never did the furniture thing.
All right. What'd you do, though? Somebody out there has done something cray, and we want to know about it. You ain't got to tell us all the detail if you don't want to, but we want to know. What did you finance out there? Did you forget to pay a bill? Something you financed. You forgot to pay the bill. You lost your job after you did something that was a for sure win or an impulse buy. Or maybe you were trying to be a good Samaritan and give to someone else, maybe at Christmas or a wedding, and then you had to pay for it. How many of you financed a ring for that special someone, and then they ended up paying for it because you hadn't paid for it by the time y'all were together, or the wedding was over, or something like that? We'd love to know those types of things. So here's what we understand, Jesse, and here's how we're going to wrap things up today. No matter what, I always need an increasingly consistent cash position.
Yeah.
Increasingly consistent cash position. I can't have months where I just don't have anything, and I need it to go up all the time. Where it happened to the dollar menu?
Gone.
You can't supersize me. I got to buy the bag of fries. You remember when McDonald's had a white bag of fries? Remember the bag? Little bag? Not the container. It was a white bag. Yeah, little white bag.
Fold the top of it.
Yeah.
Never been big on the McDonald's, but I remember it now that you say it.
All right. Yeah. So there's always an increasing cash position that I need to be in, no matter what happens. And there are tools that help me get there.
Yep.
There are several tools out there. We have found what we call the ideal asset in utilizing capital W whole life insurance because of the consistency, the guarantees, the growth, the privacy, the income tax freedom, the legacy play, and the leverageable ability. So many things built into one product. On top of that, oh yeah, it's also something that you get called upon and you normally think about, well, let me pay a little to try to get as much coverage as possible. But we've just introduced you to so many other ideal places to store money. I mean, ideal features inside that place to store money. We want you to think about it. We want you to think about it. So let's have that conversation. Ladies and gentlemen, you are always going to want to take your family to nice, great spaces and places.
Yep.
You're always going to want to have toys and buy toys and live comfortably in this Western world of consumerism. You're always going to have to pay taxes to folks who are completely backward and in debt. So you might as well store your money, S-T-O-R-E, not invest. Many of you probably think this was some sort of trick investment tool, but we haven't mentioned investments. We store our money there and we keep it there, K-E-E-P. And when we put it there, P-U-T, it is safe, S-A-F-E. Ladies and gentlemen, no investment required, no risk, all return. Michael, what are you saying out there?
He's saying that you can still get the little white bag.
Can you?
It's the value size fry.
The value size. Okay.
Thanks for letting JD know, Michael.
Right. The value is that you'll have to come back in an hour because you're still hungry. That's the value. The value is for McDonald's because I can eat some of them fries. What's the best fast food fry? I bet you're not a big consumer, but you got to have a place where you're like, no, I like them there and I don't like them here.
That's a good question.
I mean, because you can eat. Our producer over here
we're
just
hearing
yelled
something.
Chick-fil-A. I had Chick-fil-A fries yesterday. Chick-fil-A. I think he said
he
Chick-fil-A.
said.
I had Chick-fil-A fries yesterday. The waffle fry?
Five Guys is sticking out to me, I think.
Five Guys is a good fry, but there's 2 million of them. You can eat them for 3 days. But can you eat them cold? You know, you can eat Burger King fries cold.
I don't plan on eating any of them cold.
You can eat Burger King fries cold.
Okay.
It's a good fry to have cold. McDonald's? No, not a good cold fry.
Okay.
All right.
Michael, the ranch helps.
Ranch
dressing.
I mean, I can do it. I'm not going to do it purposefully.
Especially if it's homemade, but that's a different story.
Homemade ranch on a McDonald's fry.
No, well, on
any fry.
Potatoes or homemade fries or whatever. Yeah.
Got it. Michael, what's the best one out there? You got 30 seconds to help us out. Ladies and gentlemen, thanks for joining us. This hour, we have another surprise topic to talk and walk you through next Thursday. We're going live at the top of the hour, noon Eastern. Give us a few extra minutes. We're always in here trying to tweak. We've got an overhead camera here, and we're upgrading our studio with different bells and whistles. And we'll probably see my brother, the Banking Bros, other duo face, Jonah, back in the studio next week as well. Actually, I think I'm missing next week, so it might be you and Jonah.
Perfect
next week. So I don't know what's perfect about that, but one of my baby boys is having his birthday. He has no school, and it's his birthday, so it's like, oh, we're gonna have to do something. Okay, Chick-fil-A is great, Michael says, and surprisingly, Burger King are good too. Because Burger King, we're not going to Burger King anymore. We used to in the 80s and 90s. We were going to Burger King. All of us, we were going to Burger King. And you don't go as much anymore, do you? You go to Burger King a fifth of the amount of time you did in the 90s. But the fries are good cold. And I'll be going through trying to get me some of that Oreo Hershey pie.
I don't know who lets their fries get cold if you are going.
Just in case. I'm saying if you happen to need to eat them cold.
Who doesn't knock them all out right away? I don't get it.
There's some people who eat the flame broiled Whopper first, and maybe a few got to the bottom of the bag and you forgot about it.
So here we are. Do you eat the whole burger and then jump in on fries, or do you eat them together?
If I took it home, which we eating in the car.
I was getting ready to say again.
But if I took them home and put them on a plate for some reason, I'll eat them all together. If I'm in the car, I've started to in the last few years, I've gotten specific and I realize, I'm going to eat the fries completely. then I'm going to unwrap the burger and hold on to it. You know what I'm saying? Because maybe if I'm driving, I'm going to hold on to it. So I'm not going to I'm going to eat the fries out of the bag. What is this live about? First off, what are we doing here? Why did we bring this up? Jake says, order McDonald's fries.
Well, Michael's saying we rock. I
Order McDonald's fries with no salt. Doubt it. Then salt them yourself. They'd have to be hot. They'd have to be real hot. Then I might do it. Because
so no driving to the house and trying to put them on a plate like J-Doo's.
That's what I'm saying. No, I'm saying like obviously I'm going to eat them in the car.
Give me the burger. Give me the fries. I'm going to eat them both. It's going to be crushed.
I've never gone into a McDonald's to sit. Have you? When's the last time you went into a McDonald's to sit down because you needed to eat?
The answer is no.
Yeah, the answer is no, right? Maybe if you're with the kids and you're on a trip, you got to get out of the car. But okay. Anyway, ladies and gentlemen, we'll see you next Thursday where we talk about your cash and your growth and your acceleration of your wealth and your legacy for your family. We love to have you guys chime in and chat with us about all the crazy and fun and interesting things that you might want to be doing with money, how you can lower your taxes, how you can increase your legacy. We're all about all of those things.
Thanks, Jake. Thanks, Michael.
And we'll see you next week here at our coaching hour with the Banking Bros and the Cash Compound.